Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's check out some aggressive growth stocks now with Bill Wilton, our aggressive growth stock strategist here at Zacks.com. Here's an interesting one, GT Solar International, SOLR. The ticker symbol, is this a play on the entire solar segment?
Yeah, definitely. You know, one thing that's very tricky about the solar segment is figuring out who's going to benefit the most from government subsidies, which markets are going to be hot, which ones won't.
Right.
So what I like about GT Solar is they actually make the equipment that those solar makers use to make the solar panels. So they're a bit higher up on, you know, the supply chain, if you will. And they're seeing a lot of success lately. Their most recent quarter was on May 23rd. They announced that their earnings per share came in 7 cents better than expected at 41 cents. That was almost double the 23 cents they reported in the quarter about a year ago. So that beat the street, also led to them raising estimates for the full year. Analysts quickly followed suit. So now that with those estimates rising, we're seeing shares not only with a 37% growth rate this year, which is very good, we're also seeing a good value. Shares are trading with a single-digit forward PE, and the PEG ratio is coming in at about 0.7, which means that the expected growth rate is priced at a discount right now.
All right.
As far as those rising estimates, you can see here just how sharply that the analysts are raising their forecasts. Each colored line here is an annual consensus estimate. Not only are they growing year over year, but they're also shooting right into the upper right-hand corner of that chart, which is exactly what you want to see for a long-term trend.
All right. And Key Energy Services, KEG is the ticker symbol for this one. And they're an onshore rig-based oil and gas servicing company?
Yeah, so they service natural gas and oil wells, doing all sorts of different relevant services that those companies are going to need. They also topped estimates in their most recent quarter. That was back on April 28th. They saw their top line grow 55% on a year-over-year basis. They beat by 2 cents, reporting earnings per share of 9 cents. So things were very good for them. They are back in the black. They had been reporting losses about a year ago. So now that we're seeing a little bit more confidence from the company, we're also seeing that carry over into the analysts. They're expecting 83 cents per share this year and $1.39 next year. So there's some impressive growth rates, a sharp turnaround from being in the red a year ago. Also, like the previous stock, we're seeing that confidence show up in the long-term earnings trends. You can see here that they were a little bit unsure moving forward, but now that the estimates are back on track, there's plenty of upside for KEG moving forward.
All right. Do you own either of these?
I do not.
Check out more top stock pick ideas for yourself at our homepage, Zacks.com, upper right-hand corner. That's where we put 4 new ones up there for you daily, one in each of the investing categories that we write about on Zacks.com. With Bill, I'm Terry Ruffalo.